Hi, my name's Steve Ruffley, creator of iView charts. Now this is my professional package that works on MT4. This is where I make all my market calls, I get my trade calls from. It's the exact same system I use to trade every day. Now, my technical analysis is featured in Reuters, the Financial Times, Bloomberg. So all the levels that I generate are of interest to the market, and not just to people that participate in the market, but people that write about the market. So if you open up MetaTrader, you generally get these standard green and black bar charts. Now these don't tell you much information at all. Now this is the same view through the iView chart system. A lot more informative. Now my system and my indicators, my templates generally work around three main principles. Now that's the Fibonacci rules, the higher time frame trading points of interest, and the short term pivots. Now people always ask me what's the best time frame to trade on, and I've done over maybe 500-600 webinars now, and the answer is pretty simple, that you have to look at all the time frames. Now it gets very difficult to do that when you're talking about trading multiple products. So what iView tries to do is compact all this information and put it into one trade view system where you can view all the data, and also have a series of templates that you can overlay on any time frame in order for you to get the best information on the way you trade. I'm well aware that people trade in different ways, people have different opinions, but technical analysis is self-fulfilling, so you have to be looking at the same information that everybody else has, and then you either trade with them in the right or against them in the wrong. There's no point having a secret system that nobody else knows, because that won't involve the self-fulfilling prophecy of charts. Now from my experience in teaching lots and lots of traders how to trade and how to improve, these three main methods that I use generally work 80% of the time. That's a big enough edge for anybody. So we can see in this example of the euro versus the pound today. Now the Fibonacci is quite simple. The red lines are overextensions, the 50% is really the pivot, and then the green lines are where the market's going to try and retrace to on the downside. So once the market gaps, we can see the market can't get back to the 50%. So the 161.8% retracement line and the key daily bob level break or bounce area of interest is where the market can come down to. That ties in with the Bollinger Bands. Again, we'd have to break these short-term pivots, but it makes sense that when the market overextends like it has done in these big green candles, when it can't make a fresh high, makes this double top, the market then hits the 50%, so that could be a nice short. But once we really close below that, then the market opens up and gaps. Realistically, the market wants to push back lower and retrace back into this big move. So the other way we can use iView charts is by looking at the trade view. So we overlay this as an indicator. So go to our indicator, the customs, and the trade view. So once we overlay this trade view window, this will bring up all the information of all the products our MetaTrader broker supports. Very, very powerful. Now you can use this in one of two ways. You can either click on symbol and you can just be able to easily scroll through and find the products you trade most regularly, or what I would suggest is looking at the iView bias. Now the iView bias is made up of one of 7 trades. Now these are again things I've identified over the last decade, and they range from very, very strong bull reversals to bear reversals right through to the middle of the breakout trades. Now it's not for me to say which trades are best for you to call, it's just for me to advise you. Now this iView bias is built up of all the indicators I know everybody else looks at. So it's built up of the D marker indicator, RSI, delta volume, delta ATR, and again it brings into the context the Fibonacci levels that we're trading towards. So for instance, if you wanted to trade this particular product, the euro against the dollar, then this for me is an increasing bear sentiment leading to a reversal. Now there is a step above that, an imminent reversal, but this just means that although the D marker is getting low, although the RSI is getting low, there's still some remaining pressure left in before we see that reversal. So that can just stop you getting in a trade a little bit too early, and again let you look for them other levels, them higher and lower levels, to get involved in the market, to just give you that bit of more time. The other way you can use this is I've already demonstrated how well the 50% Fibonacci works. So just click on the Fibonacci column, we can go to the Fibonacci 50%, and again look for a significant close or above it. Above we're probably going to make some highs, below it we're going to see some lows. The other way that the trade view works is that if you want to see any of these particular products in action, all you have to do is double click. So if we want to see how the euro dollar is trading right now, all we have to do is double click, and that will open up the trade view trade view window with the corresponding templates already attached. So from this particular example, we can see that the gap has failed to be closed. We're well below the 50%, and we've bounced pretty much perfectly off the 423.6 retracement line. So one or two things are going to happen. Okay, the market's going to find some support and can't break the lower fib. It's going to try and get back to the 50%, testing all these fib levels on the way back up, or it's going to close below the 423. The next point is this weekly, monthly, higher time frame point of support. So it's as simple as that. The market's from this point either going to go down 21 ticks, or we've got 29, 30 ticks on the upside. And again, if it wants to close that gap, you've got a potential of 80 ticks in the euro dollar. So again, it's not as simple as that, but it gives you the framework in which to work. You've got, again, the hourly boundaries, the higher time frame, monthly, weekly and daily points of interest, and also your short-term pivots, which can set off triggers for extensions up or extensions down. The other way you can use the iView system is through my templates. Okay, so we have a template for each time frame. So we can just go back to blank charts if we want, or we can look at the setup for the 1 minute all the way down to the monthly charts. Now I can show you how this works quite easily by the use of MT4 and the profiles. So say we want to look at the pound against the dollar. Okay, so what we just do is just open up 8 charts. So the same product, just drag it through from here or from the market watch, and then you've got the ability to just put them on all the different time frames. So what I would just do is go through and cycle through 5-minute chart on the 5-minute template, and then go through to the 15-minute, put the 15-minute on, and so on. A little bit laborious, but it's only going to take a minute. So as we do that, we're starting to already build up a picture of what the charts are really trying to tell us. So this is really all time frame trading in action. Okay, so once we put the weekly on, got the monthly. This is really how you want to address the charts, how you want to start. So you start with your charts as the monthly. Okay, so we can see the pound against the dollar. Realistically, we've made higher highs and higher lows. So on the monthly chart, we're still relatively bullish. We've got some 2 key levels here. Now remember, all the levels that you see on the monthly chart, the weekly chart, and daily chart are dragged through to the lower time frames. So you don't need to know and look at a monthly chart to know where the highs and lows are. That will already be on a manageable time frame, like your hourly, your 30-minute or your 15-minute chart, where you're going to actually put the trade on. Okay, so once you understand that the market really has got some big pivots here to hit, but really we've kind of almost double topped. We've failed to close outside the Bollinger Bands. On the weeklies, it looks like we're coming back, really losing that upward momentum. And on the dailies, we finished the day very, very, very negative. You know, taking out 1, 2, 3, almost 4 days of trading and open towards the low. So what I would say is, you want to trade the pound against dollar from here. What you do is you get rid of the weekly chart, monthly, 30 minutes, 5 minutes, H4. Just tile the windows vertically. You've already got a better way of trading. Okay, so you know from the daily view that the market is looking pretty negative, but we've closed above the moving average, so we're either going to get back into this range, maybe 50% of this previous day's down day, or we're going to hit the moving average and move lower towards these pivots. And this is displayed in the same way on our hourly charts. So we're going to continue this downward move that we saw yesterday. We've got our targets on the hourlies, these lower fibs, this daily point of support resistance, and the lower fib here. I like to have the 15 minutes up because you see a lot more momentum building. So the more red candles you see, the more likely you are to hold short on the 15-minute view. So it's all about balancing iView with the trade view window, the different templates that are supplied, but then using this in your own trading style. Trading becomes a lot more powerful when you make the calls and decisions around it. So remember, all these dotted lines are just higher time frame points of attraction that will run through all the smaller time frames that you use. The fibs will only necessarily show on the hourly chart because that's where they've only got the relevance. So you have to really use the hourly charts in your charting preparation in some point, because the fibs will only ever display on this. But you tie this in with the trade view that gives you all the information, all the different 1 to 7 types of trade that I've ever identified. So you no longer become a footsie scalper or a euro dollar swing trader, you basically just look for the edge in any product you can trade. Double click on the trade view row that you like, and it'll open up the hourly chart, and again you make your decisions. If you want to back that up with different time frames like your daily and the 15 minutes, but then you just open it up and then very, very quickly apply the right kind of template. So it works on any product, it works on any time frame, and for me, it's not just how I view the charts, it's how over the last decade of being a risk manager, a mentor, a professional training educator, how I've taught people to interact with the markets. Anyone that does buy iView charts, they will get a free consultation with me. I'll set it up with the products you trade, I'll talk you through how to use it, and I would say that anybody of any ability can really not just sharpen up their entry points, but have that confidence to stay in the trades longer. That's what's going to turn an average trader into a great trader.